Hey guys, Joseph Henson here with Henson CPA Group. Last week we went through some tax planning strategies you should probably implement. This week we're going to shift gears over to staffing cost uncovered, how payroll impacts profitability. This is going to help you understand the true cost of your team. Again, I'm Joseph Henson with Henson CPA Group. Thank you for being here. I can't wait to get into this. So before anything else, let's go ahead and get started. Why staffing costs matter. Payroll is often the largest expense for a veterinary clinic. You're going to find that this makes up anywhere from 40 to 60% of your clinic, whether this is through paying you as an owner or your support staff. It is your largest overall expense. Understanding total cost for salaries is key to profitability, and it will help owners make strategic hiring, scheduling, and retention decisions. Beyond base pay, total compensation. Base salary or hourly wages. What does that really mean? A base salary is something that they pay no matter what. So if you're a veterinarian, you can say that they're paid $75,000 base. And then they receive a certain percentage over a certain metric, say 500,000. For every $500,000 that they make, you will find that they actually go ahead and make an additional 10,000 or something along those lines, or hourly wages. Would your veterinarians just rather make $60 per hour? You never know, but it's one of those things that you need to verify. And for your hourly employees, such as support staff, receptionists, stuff of that nature, that makes more sense than a base salary. Payroll taxes, this will include your Social Security, Medicare, and unemployment insurance. Your benefits, health insurance, retirement contributions, or paid time off. Then hidden costs, training, onboarding, overtime, and turnover. These are costs that will take a lot of financial impacts on you and also emotional tolls. Payroll as a profit driver. Properly managed staffing will increase your efficiency and your revenue. If you have the proper amount of staff on hand, you will find that they're able to get more done with less people getting in their way. And at the end of the day, they're more efficient, so they become quicker, and that will increase how your bottom line is affected. Overstaffing or misaligned role is a huge profit leakage. If you are overstaffed, or if you have someone who's not sure what their role really is in the company, you're going to have an issue with your profit. If someone is just sitting around twiddling their thumbs, you need to start addressing that and say, hey, maybe this isn't the right person for this. Maybe we need to look at, maybe they're not in the right role. And then understaffing, on the other hand, is overworked team, reduced client satisfaction, and lost revenue. If your team is overworked, they don't have the time to just get through everything at one point. They need to then look at everything else. Let's go through analyzing staff ratios. What is a good staff to doctor ratio? Are you over or under resourced? Typically, this is going to truly matter. You'll see we have a chart here. It's somewhere between 2.5 to 3 full-time employees per doctor will be a well-staffed clinic. But then you're also going to look at revenue per full-time employee. You want to say how productive is each team member, and then cost per appointment measures your profitability by service and staffing. This is not a one-size-fits-all. We want to make sure that we have the proper people in place so that you can utilize their strengths and that they can also help each other when they have those weaknesses. Scheduling and overtime costs. Overtime can quietly erode profits if not managed. If you have one person who makes $20 an hour and they are hitting 10 hours of overtime every week, not only are they hitting an extra $200 a week in just typical wages, their overtime is 1.5 times that. So they're now hitting $30 per hour instead. That is a huge issue. Effective scheduling reduces the unnecessary labor costs. If you are more efficient with measuring how effective your staff is with scheduling, that will make it so that you don't have more people than you truly need. And then consider flexible staffing or part-time options during slower periods of the year. In the winter months, you might find that you need one less person to help man the office. That's okay. It's something you want to look at. Benefits and incentives. Health, retirement, and additional perks will improve retention and performance. Whether you agree with the health insurance in America or not, a lot of this is tied to employers, and that is a huge drain on resources for small employers. I understand that. I hate how it has to be because you then get into the whole your health insurance is tied to an employer. It makes it harder to leave though. And then retirement. One thing every business should have is a retirement perk because that is something that shows you care about your employees' future. There are other perks that you can begin initiating and putting into place. The health and retirement are the ones that I believe in the most, and every clinic should start looking at. And between those two, retirement is number one. Incentive programs tied to revenue or efficiency can align goals. If you have an office manager, a practice manager, and you say, hey, last year we did $1 million. This year, if we can do 1.2 million, I'm going to give you 10%, whatever. If our bottom line goes up as well as our top line revenue, I'm going to give you an extra 10% bonus on the bottom line above last year. That will not only incentivize them to help you, it's also going to align them with your understanding of we want growth. Carefully budget benefits as part of total staffing costs. When you pay a doctor $100,000 a year, their true cost is more like $125,000 or $130,000 because you have to take into consideration all of their benefits. That includes health insurance, retirement, paid time off. Common mistakes veterinary owners make: treating wages as the only cost of staffing. As I've already said, there's a lot more that goes into this than just the wages. Ignoring overtime and payroll tax impacts. You don't take this into account. At the end of the day, you'll find some of your employees might be making almost as much as you are with a lot less training and education. Underestimating turnover and hiring costs. It is much cheaper to maintain an employee than it is to replace that same employee because you're out your time to interview, you're out the training time, and so your other employees who have to help train, and you're out the money it costs to find that employee. Then failing to track productivity metrics alongside staffing expenses. I talked about this already, but it is something that you want to pay attention to. Track the productivity metrics. How long is the average visit at your clinic? How much does that change if you have veterinary technician A in that room instead of veterinary technician B? Best practices for staffing profitability. Track all staffing related expenses, not just wages. As I said, health insurance, retirement, paid time off. Analyze staffing versus revenue regularly. You want to have a healthy margin in your clinic with staffing. Implement clear scheduling, performance tracking, and retention strategies. If you need help with that, reach out. It's something that we understand. And then review staffing plans annually or as your clinic grows. You want to make sure you have the right people along with you in order to grow your clinic. And in doing that, they will want rewarded as well. That's it for today, guys. I appreciate you guys coming out. If you have anything else you want to talk about, we can help analyze your payroll, optimize your staffing, and align costs with growth. I have a book now call down below. Until then, I'll